Just as always, any advice in today's session is of a general nature only, and your personal circumstances have not been taken into consideration. Okay? All right, so let us have a look at what's taken place this week, what's coming up. Now, before I do that, just a quick recap on that last Thursday. I was just looking at some of the trades that I've got open from last week, and I noticed that I had a couple of closed trades, and it was these two trades here, the Euro Yen. So let me just have a quick look at the Euro Yen. It was a fishing strip strategy, so just bear with me one moment. Let me just pull it up. Give me 1 second. Any questions on that strategy, by the way? For those of you who had a bit of a look, who practiced it, let me just drop these trades onto the chart because I remember I did them on this account. Okay, there's the trades. Give me 1 second, I'll get my drawing tool up. Okay, this was the setup. These two candles, we got in just a little bit late. The correct entry would have been there, but the market was already there and there. So you can see my entry there. There's T1, and you can see over here, there's T2 on that trade. Did anybody take that trade, by the way? Can I just get a show of numbers if anybody took it? If we had got it from the start, the trade would have made about 55, 56 pips and about 25. So, and we took a baby trade, you can see there, 0.01, 0.01, so we made like $5.60 and $2. All right, so did anybody have any questions on that strategy before I get started straight into today's session? I just wanted to show that up because I had them in my trade history and I had forgotten about those two trades. All right, let me change my profile and we'll get started. All right, so what have we got coming up this week in terms of the news front? We have the following. The major thing to look out for in what's happening in the market, I guess last week and this week it's a little bit of a quieter period, while the effects of non-farm take in. There was no real major news out last week in terms of from the US front. Okay, so the major, I guess, the flavor of the month or the major hot topic in the market is whether or not the US will raise interest rates. Now, pretty much it keeps swinging from it's going to happen to no to indecision. There were some of the figures that came out, data that came out last week was not quite on the money, which spooked a little bit of investors, and we saw the US lose a little bit of ground. But the key one, I guess, for this week is going to be what the minutes are from last week's meeting. So that will come out on Thursday. In terms of data, we've got building permits, and we got the unemployment claims down the back here. This is just basically to see if the figures that came out last week are locked in and they came in on the money. We've got inflation, core CPI figures here as well. That's for the US front. For our Aussie dollar, what do we have for our Aussie dollar? We have the meetings. Our meetings don't tend to spark and move the market too much. Although last week, I'm just trying to, if someone can just remind me, we had some data come in last week which was caused the Aussie dollar to move dramatically. I'm trying to remember what it was. It'll come to me in a moment. So the minutes come into play, especially after a sharp movement, whether they feel that we're tracking well or we're not tracking well. There is a bit of pressure from the home loan side, to start to to decrease rates. So it's always interesting what they're wording and the wording that they choose for this particular piece of data. Anything else? We've got retail sales for GBP. And of course, we've got monetary statement on the JPY. I think this particular week it's a little bit of a mixed bag. Possibly it's going to be the Euro USD, the one that's going to be affected the most. mainly because also we have the ECB, Mr. Draghi speaking, and we're particularly interested in what his sentiment is towards his quantitative easing, I guess, decision or direction. Basically, last week he came out and said that core inflation had somewhat weakened, which basically implied a downside risk. And essentially, what that spells out for us is that the ECB could be looking at expanding on their QE program. Now we know that the euro undertook at the start of the year, I think it was around about April, March time, a big quantitative easing program. In other words, they went out and started to print more euros to recover their economy. So it looks like, and Mr. Draghi is hinting towards an expansion on that program. Now, it may be just because they continue with it, it doesn't necessarily mean that the euro will drop dramatically. The other part of the equation that is being looked at is that since the euro has dropped already so much, if the quantitative easing program is smaller than what was actually predicted, well then perhaps it's already been factored into the market and we may not see the dramatic drop in the euro as one might expect. Okay, the key thing though is that this particular pair, the Euro USD, is driven by two, I guess, governments or two that want to do the exact opposite with regards to their monetary policy. The US wants to increase it. That's a D. That's a D, by the way. Sorry. Um, and the euro wants to weaken theirs. Okay, so it could be one of those great trades where if they both go ahead and do what they want to do, that you just let it sit and ride type of trade. Okay, let's bring up our charts. Let's see how it all ties in together, and let's see what we have on the trading block for this particular week. All right, let's start off with the Aussie dollar. Aussie dollar, we were looking at this converging triangle. We were looking to see if we could get a trade set up out of that. Unfortunately, we did not. We didn't get a setup out of this. Now, one thing that I'll take this opportunity to highlight this, that some of you may have noticed or some of you may have not noticed. Last week when we were looking at this, we were waiting on Monday's candle to see what these two ended up being looking like, where this particular candle where I'm hovering over was the Monday candle. Now, on Tuesday, when this candle started, there was a little fractal over here. Can everybody remember there was a little fractal there? Okay, great. Now, as it turned out, I sent out the message on Tuesday morning to basically place your order, your pending order, to buy at the break of this candle here. So now, also, the rule is that if we broke the bottom, you're supposed to go and cancel that order out. It broke down first, so essentially we had to cancel that order out. Now, when it broke down, what also happened was we created a new low, and therefore the fractal disappeared. And then this candle now became the new low, and this is the candle that's got the fractal. So then I suppose we were hoping that this candle became an inside candle so that we could take a trade, but it did not. It went too far up and we didn't get a trading opportunity out of that whole sequence. Now, some of you may have forgotten and left your pending order in the market, and well, then that was a little bit of fortunate luck if that happened to you. But that was not the setup that we were looking for. Now, someone's saying that we had a bit of divergence as well, or we were looking at divergence. Let me have a quick look at that. Bear with me 1 second. Okay, now the divergence is confirmed now. So what we're looking at is this low compared to that low. We can clearly see that it's going upwards. And then if we draw out this line, oops, by following it like that, we can see who thinks there is divergence here. Who doesn't know? Type in question mark. Who thinks there is divergence? Okay, good. There is no divergence there. All right. So divergence is when our indicator goes in the opposite direction of our price. All right. So we can clearly see that the price is going upwards, but the indicator is also going upwards as well. We said that at this point here, there may, well, in any case, that would have still been going up. So what we were really looking for is if this line was like this down here, okay, and let's just draw those lines there, then this area here would be pointing downwards compared to pointing upwards. I'll cover divergence soon again so that everybody can refresh their memories how it all works. But no, there was no divergence on this particular, not on the Aussie USD, well, at least not on this time frame. All right, that's clear for everybody. Let me get rid of this one now. All right, so what do we do now? This one's like the toughest one to read at the moment. My intuition as a trader tells me that we've just started to hit a downtrend, and I'm looking really hard for an entry to go down. I thought I might get the inside candle sequence here, but I know that that's not going to happen already because I've broken that low. So that's not going to happen. I may get a shooting star formation out of those three, but a shooting star formation works best when it's at like up there at the top. This is inside the trend, so I don't really want to use that. So I'm kind of left to wait for it to either get to the other side again and look for a trade back down, or the only other thing that I can show you is it's a little bit more aggressive. Let me show it to you. Give me one moment. I was just going to step into a 4-hour chart. So I've just drawn a line across all those four tops. All right. Now if I go back to my daily, that gives you an idea of where my line is. If we were to break on that high side like that, well then it would be a little bit on the aggressive side, and you can try and take a trade back up to the other side of the converging triangle. All right, now that would be aggressive, so I'll refrain from that. But for those of you who are looking for another trade, that is one that is available to you. All right. In either case, what I'm going to do is I'm going to wait to get there and then try and hit it down. Or alternatively, if we don't get there and we get back here, I'm going to look for this trade down there. Okay. If during the week, all right, let's say today's candle ends up looking like this, and tomorrow I get that candle there, then I will be happy to trade the price action down, all right, and that trade would be not based off the triangle, but it's based off that I feel that I'm started a trend down. Does everybody understand what I'm trying to show here? Yeah. Okay, so just remember, we have to be open-minded with our trading, and we're just simply looking for anything that's going to give us a high probability trade. All right, now trading inside a trend, especially at a 2-to-1 type ratio, can provide us the results that we really like. Now, just because I'm inside a converging triangle, there's a lot of distance between that top and that bottom. So this may not necessarily get back up here, but if it does, that's the preferred trade. That's the one that I like the best. But if I get the price action in this downward motion, then I'll start to get interested in this down trade. All right, so unfortunately right now, exactly where we are right now, there is nothing that I can really show you. I'm going to get rid of this line so I don't confuse myself. Aussie dollar right now as it is, I can't place an order. I need to wait either till we get to the top or get a little bit of an inside candle to try and hit it on the way back down. Okay, let's move on. Euro USD. Okay, this is an interesting one. I got asked a few questions. First of all, let me ask the question. Last week we placed a pending order. We almost got triggered in that pending order by, I think it was about 3 pips. We missed out on getting triggered. When that happened, did you guys receive my Twitter to readjust the entry? Yes or no? Can you just let me know, please? Okay, great. Because I did get a couple of emails from a few of you asking why I changed the entry level. All right, I'll show you why. Now, I believe we took that trade based off this candle right there, and normally I would just have entered right there. Okay, now we did not enter at market because we all voted that we were going to wait for a little bit of a pullback, so we put in a pending order. And I'll go over to my 4-hour chart and let me zoom in a little bit and I'll try and draw you the picture. So what we did was we were here somewhere, or maybe over here somewhere there, and I put a pending order and it was just there. The market went back up. It did not get us into the trade and then shot down about 100 pips. All right. Now I know for a fact that some of you got this trade because you didn't have the exact price as I did. You had a bit of a lower price, so you got triggered. Our stop was over there somewhere. Okay. All right. When the trade got that close and moved 100 pips, this was the actual movement that I was looking for. I was looking for this movement. So if I didn't get it and I wanted to stay in the trade, generally the next time that it comes back up, where does everybody have their stops? Everybody had their stops over here somewhere. So experience tells me that when the market comes back up, it'll shoot through a little bit more, and then if the momentum is still in a downward direction, and then it'll move back down. If it doesn't, well then we're going to get stopped out anyway, and that's okay. All right, so as it turns out, on the second, so from there what I did is I moved the entry to that level right there. All right, and look at that, we got triggered almost perfectly and it shot straight down. Who took this trade? I just need to see who's taken this trade. Okay, I've got 50% of you. Okay, all right, great. All right, if you're not taking these trades, I would suggest that at the very least, just try and take them in demo mode. You can't gain the experience level by just watching. All right, you need to participate to increase your experience level. All right, so even if you take it in demo mode, just tell me that you've taken it in demo. That's okay, because I know that when you're in a trade, you are more conscious of the market and you'll watch it more alert. All right, now the stop I believe was the same. So in essence, the second trade had a smaller risk. My stop was over there somewhere. All right, and when it shot down this morning, when I saw it, I closed out half of the trade and I moved that stop to there. All right, let me just show you. Give me 1 second. Where is that? That's the Euro USD there. I'll just drop it on and you can see there's the entry, and you can see this little mark there. That was the stop over there, and that's where I closed it out this morning. Okay, what I've then done is I've bumped that one down, so I've got a free trade. I don't even have to look at this chart anymore if I don't want to. If it comes up and stops me out, well, I've locked in half of my profit and the second half of my trade will get me zero. All right, we all clear on what's happening here? And there it is. I've locked in 37.04. Now I didn't get it exactly at the 1-to-1 because I don't log into this account as often, so I forgot to put a target, so I got it out a little bit less than the 1-to-1. Okay. All right, so half the trade is right there, and you can see that half the trade is up 103 pips right now, and we're still going for our full target, which is down here. Let me zoom out one step, which is still inside that level there. There's my full target. So with this one now, if the US raises their rates, or if the euro does start more printing of money, well then this one should shoot straight down. All right, and if it doesn't, well then I've already got the movement that I want out of it, so it should be a stress-free trade. Does anybody still have an open position on Euro USD like I do? Okay, so I've got 1, 2, 3, 4, 5, 6 yeses, and I've got about 7 nos. Okay, so half of you are still in. All right, so this is an opportunity for you to develop a little bit of psychological strength. All right, because we shouldn't be stressed about this trade because we've already made some profit and we can just really afford to relax on it. Okay. All right, so what do we do this week? Now, because I'm still in a trade and it's still a trade that I really, really like, fundamentally it's supporting what the market is saying, and technically it's also doing it. We got the big breakthrough, we got the pullback to the resistance. This it looks like the support level, sorry, I don't want to close something out. It looks like the support level is now acting as resistance. So everything indicates that we should move further down. How long this will take or will it happen, I don't know, but at least that's what it indicates. So because of that, if there's anybody who's not, I'll show you something as well. For those of you who are not in this trade and want to join in, what can we see? This looks like a downtrend, right, guys? Does that look like a downtrend from here? Oops. We agree that we look like we're in a downtrend? Okay. We've just had a little bit of a pullback, and look at the candle formation that we found. It's our favorite formation. We've got a fractal on an inside bar. All right, so if we were trading purely just on trend, okay, your entry would have been here, which is exactly where the market is right now on the breakdown. Your stop will be here. So if you're not in this trade already, there's another reason to join it if you want to. All right. For us, we already got in at a much better price, so we're in a more comfortable position. And seeing this setup here gives me a lot of confidence on the trade. Does it mean it's going to be right? No, it doesn't. But it just makes me feel better. All right, and that's really what trading is about: managing your emotions and making sure that your emotions help you stay in your game plan. Okay. All right, so there you go. So Euro USD, we're already in a trade. We've got an inside candle formation again on trend, so we're not interested in buying. We're already short, and we're going to ride this one out. All right, move on. GBP USD. GBP USD. Last week we saw this falling wedge type pattern. We were waiting on Monday to see what this candle looked like. It gave us what we were after. We put our pending order at the break, you can see there, and we started to shoot this way. We hit T1 and we've moved our stop to break even after we hit T1. Did who jumped on this one? Okay, we got Rav, Simon, Ray, Romy, Paul and Richard, Todd as well. Alan, great. Andrew as well. Good stuff, guys. Good. All right, so quite a few of you got onto this trade. So give me 1 second. There it is. That's what we still have left over. So we're plus 76 pips on that one. And here it is. This is the original. So this was, by the way, I'm trading this account with a $100 risk per trade. You can see there's my entry. See the little dot here? That's where the stop was. Obviously the target's still there, and all I've done is I've taken half the trade out and I've moved it to that point there. Now this one's looking a little bit, I'm not 100% sure on this one now. It's made a nice movement. We may get stopped out. So, but I'm just going to let it ride. All I'm going to do is I'm just going to adjust my target. And the reason I'm going to adjust my target is because we're starting, this to me looks like if it moves, it could be around about there, and that'll be right on the line. So I just like to get in a little bit lower. So what I'm going to do now is I'm going to drop my target a little bit just to that position there. All right. Now, this is not something that I normally do. However, because this is the dynamic of this pattern that I'm trading, it doesn't make sense if my target ends up being outside of the pattern. All right, so I want to bring it in a little bit. I've got a free trade in any case, so it's not going to harm me. All right, so here I go. I'm just going to bring it. I just move it with my eyes graphically, so I'm going to come into about here. Okay, I'll give you the number for those of you still in the trade. I have just moved my target to 153.18. All right, 153.18. I've just moved my target. All right, again, remember guys that essentially this is a free trade now. I've locked in half my profit. If I get stopped out on the second half, I'm going to get stopped out for zero. All right, and as you can see here, currently the trade is up 77 pips. All right, so if we don't get anything out of that, we don't get anything out of it. If you really feel uncomfortable about it and you want to close out, that's okay. The only thing I suggest to you is this. If you're closing out too early, too often, you need to work on that psychology, whether how comfortable you are within the trade. All right, this is a situation where even if you're getting stopped out, we don't really lose anything. So these are the situations where you actually gain more strength out of than getting just straight stopped out on a trade. All right, so there you go. So having said that, for those of you who do not have an open position on the GBP USD, this is our game plan. We're going to wait for it to get to here. We're going to look for price action inside candle again, and we're going to try and hit it one more time down. Okay. Alternatively, the other option is we're also, because it's a fall-in wedge, we're also able to look for a breakout, a good bull candle, and breakout of the pattern. So those are the two options, and possibly by towards the end of the week we may get those two. If this now comes down, stops us out, and comes down to here, well then let's look for this trade again. Is everybody clear on what we're going to do? Question being asked, you lose the profit that is in the trade at the moment. Absolutely, Linda. If so, I've got a little bit of profit on this particular trade. Let me just check what it is. But if I get stopped out, I'll lose it. That's correct. All right. So right now, those 77 pips is $32. Okay. So if I get stopped out, I will lose those $32. But if I go up and hit it, those 32 will turn into about 85. All right, so it'll give me an extra 100 pips, 0.3, 30, it'll be about 45. Yeah, it'll be about 80 if it hits. All right, and that's the trade-off between trading. But think of it this: if it hits the top, the trade has done the full 2 to 1 sort of that we're looking for. All right, if we continuously close out our trades without hitting target, we're going to get a higher hit rate. But then when we get stopped out, we end up the mathematics don't work as well. All right, so we'll cover that when I do the 1-to-1 session soon, and then I'll go through all the dynamics and understanding of the numbers because it's very, very important for your trading. All right, so that's our game plan for the GBP USD this week. So we're waiting to get to the other side to ultimately, that'd be fantastic because then this trade works and then we look for it again in the other direction. Gold. What's happening with gold? Okay, gold, we got that break. Not many of us took that trade. We got a really good run down. Now, one thing with gold is that the stronger, the more momentum we get towards an interest rate rise with the US, the weaker gold will get. All right, the less attractive as an investment gold becomes because it doesn't yield interest, gold. So gold only just, unlike currencies, which can pay you an interest in essentially it's like a dividend, all right? So if the US increases their interest rate, people want to put money back in the money, back in the bank because they're getting paid interest on their deposits, all right? So more money shifts into the currency, and unfortunately a lot of that money is money that was tied up in the commodity, so more sell-off happens on the commodity, which is gold that we're talking about, and hence it falls quicker. All right, so interest rate Fed decision is key here. If they do rise, we can see gold do something like this. So let's say we get a bit of a rally here, and then if they do rise in December, we could see it fall back down. And if we fall through this level, well then it really puts the 1000 level back on the table again. And it's been a long time since it's been down that far. All right. As it stands right now, it's difficult for me to take a trade. I got this one just a little bit too late. If I draw this kind of like a double bottom region, there is an inside candle right here. However, it's already moved a little bit too much for us. Otherwise, I could have taken a cheeky counter trend trade off a double bottom bounce. All right, can everybody see it? It's just, if I did this class this morning at 9 o'clock, we would have been in this trade, but I can't take it now. It's already moved too much, and the risk is becoming a little bit big, especially because gold, you have to trade a lot larger. Okay, so as it stands right now, let's leave gold. Let's not play with fire, so to speak, and let's see how it plays out. All right. As soon as I see an opportunity in it, I will call it. The opportunity and the best trade was the one that I did call out over here. We got the good breakdown. It was a very courageous trade, as I did mention, but that was the one. All right. So now we've got to wait for the next one. All right. So let's carry on. US yen. Okay, US yen. Who is currently in a US yen trade? Anybody? Yeah, most of you should be. Got one, two, three. Did you guys get my Twitter message this morning? Or even if you didn't get it, you would have been triggered already. Okay, last week, after that big breaking candle there, I said that in an ideal world, this is the a long-term trade that we want to really be in, all right? And I said, let's not get in where we are now. Let's put in a pending order and hopefully we get triggered. We put the pending order there, and that pending order got triggered this morning. Okay, so there's the stop. So this is a fresh trade, and where's my target? Let me have a look. Where's the target here? There's the target up here. Okay, so let me, for those of you who are not in it, the trade is still there. Let me just see what the trade is up 7 pips. So it's as good as just started. We got triggered at 122.40. Our stop is at 120.30, which is about 210 pips, I think. Yeah, 210 pips. And our take profit is 128. Okay, don't be afraid by how far that stop is. Make it the dollar value that you want to risk. All right. Now, if the dollar value that you want to risk is so little that even you trading at 0.01, you cannot participate, well, then that's okay. Just walk away from the trade. As you can see here on my trade here, I'm in the trade at 0.04, which is approximately, it's going to be around about a $100 risk for me. All right. So US yen, we just triggered, so I don't really have anything else. If you're super conservative and you're not in the trade, you could even be cheeky enough and put in a pending order a little bit lower and see if it comes down and hits you to get in. And it would be around about where I've just drawn that marker. Okay? Any questions on the US yen? No, we're all good? Okay. So let's hope it plays out and does some nice things for us. Euro yen. Okay, I just changed this chart, didn't I? Give me one moment. Okay, there's a nice falling wedge here on a daily chart, and we are right on the edge here. So what I'm going to look for is I'm going to look for an inside candle or an engulfing candle. It'll have to, it'll probably be an inside candle. Let me zoom in and show you what ideally we want to have. Now we're not going to know this trade if it comes, it'll be ready on Wednesday. We need to wait for today's candle to finish and then tomorrow's candle to finish. So if tomorrow we get a candle that looks like that, which is inside this one, that one will have a fractal. Then on Wednesday morning, we can put in our pending order for a break-in trade in that direction. Okay? So that's what we're going to try and play for. Alternatively, if it comes down here, yes or no? Am I allowed to trade that or not? Good. No, I'm not allowed to trade that. So there's no alternatives. I'm only looking for that up trade or nothing. Question that got asked, is that a flag pattern? Simon, was that on US yen? Which, or on the euro yen? On the US yen. Give me one second. This over here, no, that is not a flag pattern. Let me show you one. We had a couple of good ones on the Aussie dollar, say on a 1 hour chart. Give me one second. It didn't play out, okay? Um, Give me one moment. This here, up to about here, up to about there was a flag pattern, okay? But typically it's got to break up that way. All right, so that's more what they look like. They can have a little bit of an incline like that, or they can just be flat like that and then break out that way. Okay, so that's what they look like. I do cover flag patterns and different geometric patterns like heads and shoulders, all those types of things. When I do that class, I'll go through it in quite a bit of detail. Okay, but there you go. Okay, so Euro Yen, as we said, we're trying to bounce off that line on the falling wedge. Let's move on. Kiwi Dollar. Okay, Kiwi Dollar. Just give me one moment, guys. Let me have a quick look at this. Okay, I can see one trade. It's a little bit unorthodox. It's a trade type that I really haven't talked to you guys about. Let me just draw it out and let's see, and I'll try to talk you through it. Okay, I've drawn out this little hotspot, okay, where the market has bounced. Market's bounced, it's bounced there as well, and then it shot through really quickly, and I'm at that area here. So generally, when I have these hotspots in the market, the price tends to move away from these areas quickly. All right. Now, what I've also noticed is I've got three inside candles in a row. Can everybody see that? Three candles, inside candles in a row. Yes. All right. So we're going to try on this trade. I'm going to risk a little bit less, but I'm really trying to find the trade for us to take live today. So I'm going to place this one, and because I'm on the hot spot, I'm going to try and trade it both in both directions. All right, so I don't really care which one it goes, whether we break up or break down, I don't really care. To be honest, I got the feeling that I would prefer a breakdown, but I don't care. I'm going to take the break up or the down. All right, so does everybody understand what I'm talking about or what I'm thinking about? I'll zoom in a bit better. It's essentially the market is right on this hot area, and we're getting a build-up of pressure, and probably there should be a triangle in there on a smaller time frame. Let's look for it. Let's go to a 4 hour. Give me one moment. See, there it is. Even on a 1 hour, I'll be able to see it a bit better. See, there's the triangle. Okay, can you see the triangle? Now that triangle has been formed by three inside daily candles, and we're in there. So essentially what I'm going to do is I'm either going to shoot that way or shoot this way. All right. Now I'm not going to use the triangle to place the trade, but you can see how it's working, and that's based off a H4, so it's a 4 hour chart, but I'm going to place the trade based on my daily candle. All right, so let's do that. Go back to a daily, zoom in. Let me get rid of these lines. Okay, here's the question. What do we want to do? Do we want to break of this candle or break of the first candle? What's the correct thing to do? This is, let's call that candle 1. This is candle 2. Break of candle 1 or break of candle 2? What do we think? What's the correct thing to do? Wow, 50-50. 1 or 2? If you how do you normally trade inside candles? Is it candle 1 or candle 2? If it's an inside candle, it's got to be the most recent candle. The most recent candle is candle 2. So if we're going to trade a break of an inside candle, and it has to be candle 2, so it's not that one, it's that candle there. Yesterday would have been this one, but today it's got to be this one there. Alright, so let me measure it out. Let's see what it gives us. So the stop's going to be around about, it's going to be about a 50-ish stop. Alright, so let me place it. Give me one moment. I just got to write these numbers out on my pad here, and I'll give them to you in a second. I'll put you on hold for 1 sec. Okay, I'll place the first trade. I'll place the sell at 65. It's a sell stop. Okay, 1 second. I've got to work out my size. 55 pips. I want to trade at about 90 cents a pip for 50. So it's a US. I'm going to trade 07. Does everybody understand how I've got my 07 there? My stop 65.60, and my target, let me just put any target and I'll adjust it in a moment. It'll be 64 something, 64.50ish. Okay, let's place it. The trade looks right. Let me just move the stop around. The target 56, 63.96. All right, is everybody clear on what we've just done? The sell is in. Now I've got to do the same thing for the buy. I'm going to jump in at 58. My stop is 65.02, and my target, I'll adjust in 1 moment. Place it. Make it 66.72. Let's double check that. 0.07. I've got a sell stop and a buy stop. As soon as one triggers, you've got to go back and you got to go back and cancel out the other one. Okay, so here's the numbers. The sell is 65.03 entry, stop at 65.60, target 63.96. The buy is 65.58 entry, stop 65.02, target 66.72. Question being asked, is the fractal underneath, shouldn't the trade be long? Romy, this is not a conventional trade in a trend. I am trying to explain that we are in a hot spot, okay, where all that area is that I've marked out. It's an area which the market has consistently moved away from. We are there right now, so we are hedging our bets that it's going to move away from it again, and I don't care in which direction it moves away, whether it moves down or whether it moves up. So I'm trading an inside candle to move away from that area, either way. Okay, Other question, how do I set the target in the sell? Hamid, I just did it on the screen, how basically if you need a little bit more assistance with that one, just send me an email. I'll send you a screenshot or something, or get one of your account managers to help you. I'm kind of running a little bit out of time, but I just placed the trade right then. So when you right click and you go to trading, I clicked on buy or limit, and then the target is in this area here. Just type in the number that you want. There's the stop, type in the number that you want. Okay. Okay, last one, Euro AUD. Oh, you mean the value? Okay, I said that I wanted to risk $50 on the trade. That's how much I'm risking. Okay, the stop is 55 pips. So that means I've got to trade at approximately 90 cents per pip. This is something in USD, which is about, so if I trade about 70 US cents, it's going to give me the number that I need, which means volume 0.07. When I do the next one-to-one class, I'll show you how to, I'll go into a lot of details on how to do that. The other option is you can do the mini terminal as well. Okay. Quick question. Can you set up an OCO order for this type of trade? Simon, the answer is if you're using mini terminal, yes, you can. Okay. Email me. Any other questions? Great. Okay. Last one. Let me get to it. Euro AUD. Oh, it's not showing me. It's not speaking to me, this chart. Give me a moment. I cannot see absolutely anything on this chart, guys. This one doesn't look good at all for me. The only thing that I'm thinking is we seem to be in downtrend, so we would wait for another pullback to try and get in on it. But I think we've got plenty on our plate, so let's leave the Euro AUD alone. And in any case, yeah, so let's leave this one alone. Okay, so nothing here. All right, let us recap on what we've done. Aussie dollar, we are waiting to reach one of the extremities of this converging triangle. Euro USD, we are currently on a short. For those of you who are not in this trade, there is also an inside candle on a downtrend. Okay, so this is a free trade for us. So hopefully it continues to move in our direction. GBP USD, we are in a long at the moment, another free trade. And we're hoping that we move to the other side of the channel. When we do move to the other side of the channel, we're going to look for a short again or a break up through the channel. Gold, let's wait this one out a little bit. We've missed this entry. Okay, so let's wait it out and let's see what it shows us. Aus Yen, we've just triggered long, and this is a long term trade. This trade may run for us. It could run for us until that Fed rate decision next month. Okay, so this one, be patient with it. Let's just sit and ride this one out. It's more of a fundamentally based trade that hopefully gets triggered along with a Fed increase. Okay, Euro Yen. This one we'll know if we're ready to go on Wednesday. We've got to wait for this current candle to finish and tomorrow's candle to see if we get the setup. Kiwi Dollar, we've just placed pending orders in both directions on a break outside of the hot spot. Let's see if it plays out for us. We're risking only $50 on this one, where we normally risk 100. Euro AUD, nothing on the cards for us. The summary to our account, you can see here, if we were to close everything out right now, we are sitting on 5,636. So the account's coming along nicely. Well, the object here is we're looking for high probability trades. We're not interested if we're correct or wrong. Okay, so don't get too upset when we're wrong. We're just looking for high probability trades. Any final questions before we call it a day, guys? How are we finding these classes? Are most of you taking the trades? Are you participating? Or are you still a little bit scared and a little bit shy of the market? How are we finding it? Okay, so most of you, I can see the ones that are taking the trades. They're the more active ones. If you're a little bit, you know, quieter, that's okay. Um, just the more you participate, your experience level will grow exponentially. Okay, we learn a lot by just watching, but when we actually physically do it ourselves, that learning curve becomes much greater. Okay, this week I'll find us something to do. We'll continue on our strategies journey that we are undergoing, and we'll be ready to do a little trading challenge. Or probably we're still about 5 weeks away as well. All right, so take advantage and just get more live experience. The more you get, the quicker your learning curve is. All right, I'll see you all on Thursday, 3:30. Have a great afternoon, and I'll speak to you then. Bye for now.